Where did all the time go? Well, let's get to it. So I'll start the presentation. 3 at 3 brought to you every business day at 3 p.m. Eastern. Give or take. Because sometimes I just get a little behind, and today is one of those days. It's been a great day of trading. The Dow is up 285 points, NASDAQ up 33, S&P higher by 23. Bang! What's the driver? You guys know. Remdesivir. As soon as that news hit the headlines, we flipped basically 30 S&P points off the bottom because we were down better than 24 in the S&P and flipped to positive. And now we're significantly better than that as the S&P trades to the highs of the day right here. All right, let's get to it. The disclaimer is this, that this is presented for informational and educational purposes only. You want to learn more about what we do, go to marketrebellion.com/get started. Over at Market Rebellion, we teach people how to trade stocks, how to trade options, how to trade cryptocurrencies, how to trade futures. All of that, folks, and it's at your own pace. You don't have to join a class. It's all on your computer. So in other words, you buy whatever module you would like to start at, beginning, intermediate, advanced, and you can go through it at your own time frame, whatever suits you best. Every chapter that you go through has a test so that we know and you know that you know what you're talking about before you move on. Now, we do that because we have found that otherwise people just try to basically flip through really fast and they want to just get to it. We want you to be smart about it because it's your money. We want to show you how you can be a better manager of your money. Want to learn more? Go to marketrebellion.com/get started. HPQ. So just yesterday, we talked about this one when the stock was $16.38. HPQ has moved up through 17, and it is, as of this broadcast, $17 on the nose. So what happens here then? End of July, the 31st of July is when these options will expire, the 18 strike calls. They were bought for 29 cents to 38 cents. I think I'm in for either 33 or 35. I don't know for sure. But how has this been working out? Well, there you see, high of the day, 49 cents. So it has not been a double yet, but I am happy about the progress that it's making to the upside, and I'm still holding these. I have plenty of time because next Friday is, of course, the 17th, which is regular July expiration, and you'd still have 2 more weeks, the 24th and then the 31st, before these expire. So I've got time, even though they're out of the money. I continue to hold here, and I'll point out that they were also buying the 1750 calls in here today. So that's another endorsement of the trade. Another one, FE. This is fresh meat, the first of our 3 at 3. FE, First Energy. So let's take a look at this one. First Energy, when we saw it, which was not that long ago, 239. So let's call it a little more, maybe half an hour ago. We saw these August 43 calls being bought for 78 cents. Every option is for 100 shares of stock. So 78 cents means $78, which means, of course, that somebody traded 4,000 of these for 78 cents, basically $300,000 trade like that. I want to follow those people. Stock was 41.24. You know where it is right now? 41.24. Still exactly right there. When I did this snapshot, it was 41.20. So you see that it's made a nice move over the past 2 days. July 9th low was about 39.75. It has moved now to 41.20. And again, they are buying August calls. These don't expire in a week. These expire in a week and 4 weeks. So basically 5 to 6 weeks from right now. I'm in these calls. Let's see where they go, folks. Keep in mind that the people that already had these, this trade in First Energy, they sold those July 40 calls for $1.41, taking profits there. So now they want to roll out till August. I like following people who have been right. Let's go to our second of our 3 at 3. But before we do, make sure you look for this tweet because I'll be tweeting out my interview with Market Smith and Irusha over at Market Smith. We had a nice conversation, flattered by a lot of the comments that you guys have made on the podcast. I will post this again later today. Second of our 3 at 3, it's an airline stock. It is SAVE, S-A-V-E, which is Spirit Airlines. Spirit? Bravado, a touch of daring do. That's from Life of Brian, I think. Anyway, Spirit Airlines, 1725 was where the stock was. They bought 1 million share equivalent, 10,000 options, since every option is for 100 shares, is 1 million share equivalent in Spirit Airlines. So they bought the 1750 calls that expire a week from today. A week from today, 7 days from now, 5 trading sessions from right now. They paid 70 cents up to $1.20. Now, one of the reasons that when we show this, you might say, well, they paid 70 up to $1.20? Yeah, because they came scrambling in there and they were overwhelming the sellers. So they paid 70, they paid 75, they paid 80. You get the idea. Chased it all the way up to $1.20. So what I'll frequently do is wait, see if we don't get a chance to buy those back in. I got my chance, bought in cheaper. I paid $1 for these options. And now, with these options a week to go, you need to be very aware of T, theta, time decay, because there's a lot of that in this option. It's got a week, like I said, 5 days to trade. I am in these calls. If you are brave enough to follow us into these calls, be aware that you're going to need to be nimble after Monday or Tuesday, because the time decay starts sounding like the air escaping a balloon. Psst. You can hear the premium coming out when you're that close to expiration. So just be aware of that, folks. There's a graph, as you see. Just today, the stock trading from 1570 up to 1760 and then pulls back ever so slightly. Right now, it's 1741, higher by better than 9%. Now, obviously, the remdesivir news is good for any of the COVID-related plays that have been so hammered by what has happened in our economy, because when you shut down hospitality, when people aren't face-to-face, and instead have to do it via Zoom and so forth, that has really hurt the airlines. It has hurt hotels. It has hurt the likes of cruise lines. You get the idea. Anything where you had to have face-to-face has suffered during this. So anything that makes people feel a little more comfortable, like a successful prognosis for a particular treatment, like remdesivir, like hydroxychloroquine, yes, because University of Michigan this week said that it cut death rates by 50%. You can pull up that survey. Anyway, Spirit Airlines was a $55 stock before all this bad stuff happened. So to see somebody in here buying the next week expiration 1750 calls might be a good bet. Keep your eye on it. The third and final of our 3 at 3, Baba. Alibaba. Alibaba, of course, here's one that I screwed up totally several times and still have made money in here. But I've lost money in here a couple times too, because I bought it when I saw a bunch of call activity at the 225 strike when the stock was 210. It jumped to 217, 218, and then broke all the way back down, and my discipline took me out because, as you guys know, not every trade's a winner. So what I do is, if I paid, for instance, the prices you see on your screen here today, if I paid that, I would cut my losses at half of that. Now, let me show you how this smart trader is cutting their losses, potentially. At least cutting their exposure, not their losses. I misspoke. How they're cutting their exposure. So they bought 6,000 of these July 275 calls with the stock at roughly 260. So $15 out of the money, let's call it. They paid $273 to $286, which is $273 per option. Go get them, Dexter. Paid $275 for each option. They paid all the way up to $286 per option. Again, every option's for 100 shares of stock. So what do you imagine then that 273 times 60 is? Well, you guys know that this is over $1 million. It's about $1.5 million trade. Like that. I want to follow guys and gals that make those kind of trades. So what did I do? I got into this trade. I got into it at a lower level, not lower level than these prices. I got into a lower strike. I bought, for instance, the 265s and sold the 275s. But this is why these guys did what they did. They paid, let's say, $280 for these calls. And then look what they did. $15 higher. They collected, for selling the July 290 calls, about $1.30 or so. So in other words, 280 minus $1.30 would be $1.50. That's a lot more palatable, isn't it? They have $1.50 at risk in this trade. So $1.50 is $150 instead of $280. So $1.50, and they're into this thing 6,000 times. They could, in this case, it's a $15 spread, so they could turn this this $1.50 investment into $15. In other words, nearly 10 times, 10x, to quote my friend Grant Cardone, 10x. That's the potential if this is 290 or higher by July expiration. Now that's a big leap, which is why, folks, that for my money, I got in here and said, you know what? I think these guys could be right, but I'm not as comfortable buying the stock at buying that much upside out of the stock. So what I did was I bought, as I say, the 265 calls. So let me tell you where those, where I bought those. So the regular July expiration, I stayed in the same expiration as these guys, which I normally do. The regular July 265 calls. Boom, boom, boom. Here we go. Looks like I paid $6.50. $6.50, which is very close to yesterday's closing price. It was $6.60. So I paid $6.60 for the calls, I believe, and I sold the 275 calls, which you already see here, are $2.80. So that was my way of expressing how I wanted to follow this particular trade. Now, there's the stock. There you see it making that nice pop from July 7th to July 8th when it moved from approximately 236 up to gapping higher through 240 and then has moved all the way up now to 260. I'll point out this, that my friend Tom Lee over at Fundstrat shot me as far as the break that he saw, the big explosion to the upside in the Shanghai Composite. He said, look at this range-bound line, John, right around 3,100. And look at how decisively it broke through that. And that the Chinese media, even their mouthpiece, even the Global Times, are talking about, wow, a lot of upside here, potential for China. That's what they're saying. Of course, they're cheerleading their stocks the same way we do, folks. So just wanted to point that out. I am Jon Najarian. Make sure before you commit your capital to any trade I might describe that you understand the risks involved, because there's always risks. I try to quantify those risks. I try to limit my exposure, and I always cut my losses if I'm experiencing losses in the trade, and I try to let my winners run. On a double, I take off half and let the rest continue to perform. I am Jon Najarian. I hope you have a great weekend, my friends, and I look forward to being back here with you next week for more unusual option activity, or UO.